Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 6th of June 2021 and we're looking at rising oil prices and their potential effect on the price of gold and silver moving forward. So let's take a look. Now yesterday we published our gold and silver weekly update for the week ending the 4th of June, where we highlighted that gold finished last week down $13 at $1,891 and silver was down 12 cents at $27.81, though both had been much lower earlier in the week until disappointing non-farm payrolls report came out on Friday, which caused a small recovery in both prices. We also produced two noteworthy videos, one on Friday entitled Gold and Silver Down and Cryptos Under Pressure, and on Thursday Gold and Silver Fall as economy picks up, but for how long, which supports yesterday's update, and we've listed all three in the description box below in case you haven't had an opportunity to listen to them. So it's quick access. Now today we're going to take a brief look at oil, because as we mentioned yesterday, oil prices are back on the rise, and Brent crude closed at $71.89, and WTI crude closed at $69.62, and some analysts believe that their prices are going to rise further. So we thought we would look at two articles. The first published by American Bullion Inc., which states what effect a rising oil price can have on gold and silver prices, and the second article by Bloomberg, which was published today, highlighting that the oil price is being manipulated to some extent by OPEC Plus, or certainly the results of their decisions, and why future high oil prices may be with us for some time. So we shall look at each of these back to back. American Bullion Inc. Do oil prices affect gold prices? It's a well-known fact that oil prices have tremendous influence on the rest of the economy. During periods when oil prices soar, inflation inflates the prices of almost every item in the economy. This is simply because gas prices rise when the price of oil increases. When the price of gas increases, the cost to transport goods from point A to point B also increases. The price increase is then transferred to the consumer in the way of higher prices at retail for the exact same items. So while it's true that the price of oil impacts the overall economy, could it also affect the price of gold? Gold is an important asset that has been a storehouse of wealth for thousands of years. Throughout history, every time a major financial crisis occurs, gold holds its value while paper currencies become worthless. Even in ancient Rome, as money was diluted with other common metals, people flocked to the older gold and silver coins that were minted with standard amounts of the precious metals or gold nuggets in general. It's second nature for humans to flock to the protection of gold investments when the economy is in ruins, their country is failing, or their money is quickly losing value. In the modern world, oil prices are a good indicator of coming economic problems, and it is why we must monitor the price of oil to give us a view into future gold prices. Typically, oil prices tend to plummet before a recession hits. A prolonged period of lower oil prices often signals a severe recession or even a depression. However, eventually this period ends and oil prices begin to move upwards again. This typically signals economic growth and produces inflation, which is consistent with a growing economy. If oil prices get too hot and begin to soar, it can produce rampant inflation in any economy. This is just the recipe needed to produce huge gains in the gold market. Gold is one of the best inflation hedges known to investors. No other asset does a better job of protecting purchasing power than gold. In fact, gold can save vast fortunes when the local currency of a nation becomes worthless overnight. Because of this unique investment property of gold, rising oil prices typically send us an early inflation signal, which is very bullish for gold. As inflation increases and begins to reach hyperinflation levels, gold prices tend to soar. It's no wonder that gold's price reached $1,900 per ounce when oil prices were at or over $100 a barrel. Not only were oil prices at all-time highs, but real estate prices and the cost of many other goods were also very elevated at or near multi-decade highs. Over the next couple of years, it's impossible to know what will happen to the price of oil or the price of gold, but it will be vitally important to pay particular attention to the price action on the price of oil. This will give us key insights into the health of the economy and help to predict the future inflation that we may experience. If the price of oil suddenly rises to the $100 per barrel range, then it could be just the signal we're looking for as gold investors, and we could predict that a big move in the price of gold is just around the corner. End of article. Bloomberg article dated 6th of June 2021. Headline: World's top oil trader Vitol sees OPEC Plus controlling the crude market. OPEC Plus appears in control of crude prices as US production is lagging pre-pandemic levels, according to a senior executive at the world's biggest independent oil trader, Vitol Group. The decline in US drilling and output leaves little competition to efforts by the producers group to manage markets, Mike Mueller, Vitol's head of Asia, said during an online conference on Sunday. Brent crude closed above $70 a barrel last week for the first time in 2 years, as buyers demand more oil than producers are pumping. US oil producers are still employing only half the rigs they used before the coronavirus struck. Meanwhile, OPEC Plus, as the group led by Saudi Arabia and Russia is known, is easing barrels back onto the market as demand recovers. There's a perception in the market that control is with OPEC Plus, Mueller said at the event hosted by the consultancy Gulf Intelligence. It will take a long time for US oil to come back to production levels seen before the coronavirus outbreak, he said. The Organization of Petroleum Exporting Countries and Partners agreed last week to continue easing production restraints in July, but left markets guessing about what it will do for the rest of the year. After cutting production by some 10 million barrels a day, or a tenth of daily global demand, the group still has about 6 million barrels a day of idle capacity. OPEC Plus gives little away on policy, even as it sees market tightening. China's economy will continue to grow, helping bolster oil demand and bringing down crude stockpiles, Mueller said. Economic expansion and regulatory changes, they will likely cause domestic refineries to process more crude, he said. It doesn't pay to hold inventory at all. Destocking must continue from a purely commercial perspective. More Iranian crude oil is likely to hit markets this year after an expected deal to limit the country's nuclear program in return for the US easing sanctions. Iran is limited in how quickly it can bring oil back to the market, since a lot of its stored barrels are condensate, a light and sulfurous liquid, which may be harder to sell, he said. Given delays in negotiations last week, Mueller said it's less likely more Iranian barrels will hit the market before the fourth quarter. End of article. So, a rising oil price arguably contributes towards inflation, and if out of control, hyperinflation. And in times of inflationary stress, gold and silver often come into their own. Now, we admit we are to some extent arguably in a period of deflation or stagflation, but there are growing signs that inflation is rising, and we're witnessing this by recent economic reports, and coupled with currency devaluation due to enormous amounts of stimulus relief printing. It is therefore only just a matter of time before we shall see the considerable rises in both gold and silver prices that many have waited for far too long. What do you think? Do you agree with the article? Do you believe that OPEC Plus will continue to keep prices high And will this filter through in much higher inflation throughout the economy, thereby providing a tailwind for gold and silver prices? Or do you see a very different picture? Do share your thoughts. Meanwhile, thank you so much for listening. And if you haven't already done so, please subscribe to our channel. Not forgetting to press the bell sign so you're notified of our videos as and when they are published. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.